if you count to 4 from now.
Welcome to Infront ASA's Q3 2020 results. With us today we have, as always, Max Hoffer, the CFO, and Christian Esbach, the CEO. Over to you guys in Oslo.
Hello everyone, welcome to this presentation and thanks for taking the time. My name is Christian Esbach, I'm the CEO and co-founder of Infront. Infront is a company that helps our customers gaining a unique market insight and the help they need to take the right decisions. We are a full-service financial solution provider that offers a wing-to-wing solution to the advantage of our clients. We cover everything from web solution to professional analytics and trading solution for a number of different assets. We have also fast and content-rich data feed and a calculation and validation service. We have a history of very strong growth. The revenue has increased with 500% over the last 4 years. Our coverage has increased to more than 120 exchanges and we have more than 8 billion daily data points. We have offices in 10 countries with around 3,500 customers. Infront offers applications or software with content. And since the content or service part is vital to our offering, everything is sold as a service, software as a service. This is sold as a subscription-based model where every customer pays a monthly fee to us based on the delivery and the number of users. Very simple but attractive business model. We have in this quarter continued to realize cost synergies and have reached a record high Ebitda level of 5.7 million. We are still in a transition period where several solutions come together and becomes one, and we position ourselves for future growth. Compared year on year, we can see a significant Ebitda growth and a more stable top line. We have focused a lot on our margins and new sales has been quite good, but the churn has been on a higher levels since systems are getting redundant and that affects the clients. When migration is done, we expect to see a lower churn and the net growth will be significantly better. After acquiring several European players, we have become the largest European player in our segment and are now in the process of aligning teams and product offering, making solutions redundant and getting everything on one platform. We are also expanding our sales department and rigging the company for more growth. Our greatest asset is our client base with leading banks, broker, asset managers, investor, exchanges and issuers all over Europe. Giving great service to our client is our number one task. We listen to them when we improve our product and we can grow together with them. I'm proud to announce that we have acquired Ebitda, a key local partner in the UK. We have been working with them for some time and we have been very impressed with what we have seen. Ebitda offers a modern execution and OMS system. OMS is order management systems. They have a number of small and mid-sized brokers in UK as their clients. They have a very advanced hosted solutions, exactly what the market wants. With us, Ebitda can get access to more market data, a better trading terminal, and most importantly, being part of something bigger. For Infront, we get access to a client base where we can upsell and we can add an OMS solution to our offering across Europe. We are moving forward with our cost capturing with 5.5 4 million euros realized in annual savings so far. Long-term cost synergy target confirmed. Let me communicate some aspirations. Number 1, be recognized as a leading European financial information and technology provider. 2, deliver high single-digit net organic growth. 3, achieve a long-term Ebitda margin of 25% plus. That's it from me. Our CFO, Max Hofer, will take over from here.
Thank you very much, Christian. I will now present you the financial results, the financial highlights of the third quarter. In these very uncertain and volatile times, it is a pleasure for me to be able to present a record quarter. Revenues for the quarter came in at 28.6 million euros, which compares to 25.3 million in the same period last year. Adjusted Ebitda came in at 5.8 million euros, which compares to 2.9 million euros last year. And the Ebitda margin is now above 20%. Also on a quarter-to-quarter development, we saw an improvement in both revenues and Ebitda. 97% of our revenues in the period came from recurring subscriptions and volume-based invoicing. Again, reflecting the resilience of our business model in today's volatile markets. Moving on to the key financials on a quarter-to-quarter overview. As already mentioned, the third quarter revenues in 2020 came in at 28.6 million euros, which compares favorably to both last year's same period revenues, but also compared to our second quarter revenues. We still see a significant strength in the volume-based business of our German subsidiary as the markets remain volatile and we see a strong trading activity. And this, of course, drives the revenues positively. The adjusted salary and other OPEX shows that we have been successful in taking out costs over the past 12 months. We have been reducing staff levels in some areas and are continuing our integration efforts successfully. We also saw some positive impact from reduced traveling, less use of freelancers and consultants over the past few quarters. And as you can see, we are now at the level of operating costs that is comparable to last year's third quarter, which again is not a full quarter of VWD included in the numbers. So hence we are really significantly lower than last year. The gross profit and margin development is also very positive. We see a continued improvement of our gross margins in the wake of the recent acquisitions. We are now close to 67% in gross margin. We believe that this development will continue as we will reap additional cost synergies on the data cost and will be able to spread the fixed data cost over a larger user base and also sell higher margin products going forward to our customer base. The adjusted Ebitda and the margin development reflects, of course, the development of the top line on the costs. And we are now at the 5.8 million adjusted Ebitda for the quarter with 20.2% margin. As we are transitioning to a new segmentation of our operations, we are presenting the revenue development by region and the old segments for last time this quarter. Overall, we have seen a very stable development across both regions as limited new logo sales are compensated by low churn. The same is true if we look on the per segment view, where all the different segments have shown significant or have shown actually a stable development over the past few quarters, despite the challenging environment. As we're integrating the operations of the recently acquired businesses into the Infront Group, we are also now about to update the operating segments that we present to the financial markets and you investors. We will show them going forward based around the different product and solution areas. The first one being terminal and feed solutions, which will include the core Infront professional terminal product, but also other data and feed solutions and electronic trading solutions, as well as the market manager and investment manager products. The second segment will be the portfolio and regulatory solutions. This is mostly products that are focused on the buy side, such as portfolio management software, a variety of advisory tools and regulatory services, as well as calculation services that are used by a broad range of financial institutions. The last segment is media and other, which includes different media publishing and listing services, the news services in the Nordics, as well as other ancillary activities related to other products and solutions that are not covered by the other two operating segments. Looking into how the revenue development and the Ebitda development looks like for these new operating segments, we see that the terminal and feed solutions show a quarter-on-quarter growth of 200,000 euros. And the Ebitda growth of 600,000 mainly reflects the synergy efforts or the successful takeout of some costs that are now materializing. The portfolio and regulatory solutions show a stable underlying development both on the top line and the bottom line. Media and other is also stable on a quarter-to-quarter development. And lastly, we have some eliminations and group functions. This is just a cost center. And here we see a decrease in the costs of 1.1 million compared to last quarter, which reflects mainly a limited booking of restructuring costs in the quarter. Over time, we expect this to be rather stable, potentially going somewhat down. Next, I want to walk you through the cash flow for the third quarter. Here we clearly see an impact from the increased seasonality in the operating cash flow since the acquisitions of the German and the Italian business in our operations. The operating cash flow was negatively impacted by impact of net working capital impact of 2.3 million euros in the quarter. Furthermore, we see the investing cash flow has now stabilized at around 1 million euros in the quarter. We have somewhat reduced the capitalized R&D efforts. More is expensed directly in the P&L. And we have also actually quite limited capex in other investments of 400,000 euros in the quarter. The cash flow from financing mainly reflects repayments of lease liabilities. The cash position of the business at the end of the quarter was 16.6 million euros, which is a small decrease versus the end of the second quarter of 1.6 million euros. I've already briefly mentioned the impact of seasonality describing the cash flow of the third quarter. Now I want to give you a little bit more information on the annual variability of the cash flow. What is shown here is the net changes in cash position on a quarter-by-quarter basis for the past year. We started the last fourth quarter in 2019 with a cash position of 13.9 million euros. And we came in at the end of the third quarter this year with 16.6 million. This is an increase, but this increase does not show the full impact actually of the cash generation that the business is having. We see clear seasonality in cash generation with a positive net change in our cash position in the fourth quarter and the first quarter. And the reversal or somewhat reversal in the second and third quarter of this year. This is due to seasonality in invoicing and in some geographies and for some product categories in the group. On top of that, I would like to pinpoint two key elements. The last 12-month period also included extraordinary cash outflows of in total 2.7 million euros that were related to acquisition-related one-off costs. Without these, our total net cash generation over the past 12 months would have been 5.4 million euros. Second, going forward, we will see an even stronger cash generation as the positive impact of realized cost savings becomes visible, leading to accelerated deleveraging of the business. We expect the seasonality pattern to continue going forward, but overall, we will see, of course, even higher cash generation due to the improved profitability of the business. To sum up, Infront has now become a leading European player for financial information software for financial professionals. The company has shown strong growth over the past years, with our annual subscription-based revenues at the end of the third quarter standing at around 111 million euros. With the ongoing integration of our recent acquisitions, we are also expanding our product portfolio and position the company for strong organic growth. At the same time, these efforts lead to significant cost synergies. These cost synergies become more and more visible going forward. Over time, we are also confident that our efforts will result in both additional top-line growth and operating expansion of the margins. Finally, we will continue to complement our product portfolio and geographic reach through strategic M&A. And as you have seen already and was mentioned, we have an attractive pipeline of various growth prospects. Thank you very much, and we will now go over to the Q&A.
Okay, now we are live with a picture of us. That's good. So we have got some questions, and let's start with one here. Thank you for providing inspiration for the entire group. In what business segment or region do you see the most growth potential in long term? I'll publish this. Okay, yeah, I see a lot of potential many places and within many product areas, but if I shall pick one area, I think I will pick UK. I think it's really interesting. So mainly because it's a huge market. It's maybe around half of Europe in total, and it's a very, very tough market. A lot of players don't manage to enter that market, and we have tried for several years, and we had a breakthrough like a year or two ago, and have got some nice growth in UK this year from low level, but anyway, and now with this latest acquisition, I really believe that we have the right setting to really take some market share. So that will be very interesting to see. If I should take a product, I'm really excited about the regulatory feed. This is a market that is growing, and we have a very strong product, and it's not that many good products out there, and the price levels are very high. So that will be very interesting to see how that develops. Okay, another question. Let's see, here we have a COVID again. How has COVID impacted you, and does it change the outlook for 21? Nah, not really. Not changing the outlook for 21, but and how has it affected us so far? It has affected us, but I will say not significantly. So it's the same that I've said earlier. It's a little tougher to get in contact with new clients. We are used to mingle around these special events and so on, and meeting potential clients, and that doesn't happen now, and it's cold calling is not that easy. So it affects the pipeline, but I think the activity level is very good, and the results from sales is quite good. So I will say it's probably not significant, and this will likely continue, and hopefully we get less affected by COVID next year. Yeah, Max.
Yeah, I take the next one here. I think that's a good one. Yeah, it's related to the aspirations that we have communicated today. You are aiming for Ebitda margins above 25% in the long term. What do you see as key drivers behind the margin improvement? Yes, with respect to our aspirations to increase Ebitda margins, as stated, this is a long-term target. So this is something that we will work towards once the integration is completed. And the way we want to achieve that is, of course, first of all, through continued stringent cost control. And we have also areas that we can leverage on, like the data costs, where we have really a potential to expand the user base and through that get additional operating leverage. The same is, of course, true for all the other products that we produce. It's really about gaining market shares, increasing revenues, and through that increasing the operating leverage in the long term. At the same time, as I said, we are really cost focused, so we will maintain our focus on really keeping costs low, becoming even more competitive, and also differentiating ourselves from our competitors through that. And through that, we think also we can succeed very well.
How will you reach high single-digit organic growth? Today we are in a transition period with I'm still in the migration period, so this is hurting the sales a little bit for many reasons. We need to migrate some clients, and it's new solution to learn, and it's a number of things that hurt the sales with a few percentage points, and the same goes with churn. We expect the churn to be a couple percentage points higher than normal during this period, and if so, that creates a lower single-digit growth, and when this transition period is over, then I think we should be there on a high single-digit net growth. It shouldn't be a huge problem, I think. Yes, can you tell us more about the rationale behind the acquisition of NB Trader? Okay, it's not that much more to say than it's on the just said in the presentation, really. But what can I say more? Yeah, what I can say is that to acquire something or a company today to a lower price than Infront's valuation today is really tough, maybe not possible. So we have to be a little creative. So here it's also some synergies, some cost saving potential. So if we but not significant. So with that included, we are paying not so far from Infront's valuation, and quite close. And on top of that, we have an earnout, so that more like a success thing. But what we are buying here is not really the client base. It's more the technology, because we believe that this technology is absolutely what the market needs. And they have this company has never lost a client. It's but it is very, very small. So they have a problem with reaching the bigger players because they are too small, and they think it's risky, I guess. So we believe that for Ebitda to be part of something bigger and more solid, we will have a lot more success with also bigger trader with this order management solution, and it can hopefully grow a lot. And we also have. I will have this as a part of our offering in Europe. So I think it has huge potential. That I forgot to publish it now.
Okay.
Yeah, the next there maybe Max is the.
Yeah, I can talk a little bit more about the financial aspects maybe of the Ebitda acquisition. We got 2-3 questions related to that. The first one, I think, or the questions are really around how we're going to finance the acquisition and how it will impact the deleveraging of the company. I think what we can say there is that this is a minor acquisition. It's a company that has a little bit more than 1 million euros in annual revenues. And the acquisition price also, the purchase price, which is not communicated, is also in a low single-digit euro amount. So it really doesn't have a major impact on the deleveraging or on the financing capacity of other things in the group. And as Christian said, this is a very strategic acquisition. The Ebitda contribution from day one on will not be that big, but we know that we can really leverage the product both in the UK and over time, hopefully also across the other geographies that we operate in. It's a very interesting product, it's a modern product, and so through that we're really excited about it. With respect, there's also a minor point when we think it will be integrated. The closing of the transaction will happen now in the 4th quarter, and we also expect the company to be fully integrated within the Infront group by early 2021. So it will be a very fast integration. As we know the team already really well, and we have been working with the team of Ebitda for some time, we also expect to really have a rolling start and don't see any implementation issues.
Yeah, what timeline do you see for offering Ebitda-based OMS solution in other European countries and UK? That is not clear yet. I'll just have to say. So, yeah.
Okay, I got a question here regarding the margin aspiration. One more question. You introduced a healthy margin aspiration in the long term, which is positive, but what would you say is a normalized margin near term? We have reached a level of 20% plus in Ebitda margin in the 3rd quarter. As we're taking out additional costs and those costs will be visible in the P&L, we expect that to be basically the new starting level for our Ebitda margins. And of course, how much and how fast we reach our ambition really depends then also on the market development next year, new sales activities, and of course how fast we are able to take out the remaining roughly 6 million euros that we have found as synergy potential. So I think we are quite confident to say that this is the starting level for our Ebitda margins going into 21, and then how fast we approach our aspirations is really a function of how fast we can grow, how fast we can roll out additional products, and how well we succeed in taking out costs at what timeline.
Yeah, can I take on there? Are you experiencing traction with upselling efforts? Yes and no. I mean, we have upselled the different regions' product in new regions. I mean, we have sold terminals all over Europe, and we have sold portfolio solution in the Nordic and feeds in the Nordics and so on. But it is not up to full speed on that area yet. So. And this is because of the migration. So a lot of the parts of our data universe is not reachable yet from every solution. So we need to take it a little slow, so to make sure that we have what the client needs. So, but it's happening in these days, but we haven't seen too much of it yet, so it's a lot more to come there.
Yes, we got a question regarding number of employees in Infront Group. How many employees does Infront have in total? Different numbers have been communicated, and I think what can be said around this is that we, at the time of the acquisition of VWD, the group had around 530 FTEs. We are now at a level of below 490 FTEs. So these are the official numbers.
Will you provide a more detailed breakdown for your long-term cost synergies? At least not now, and maybe not in the future either, because it's a number of elements that needs to be in place, and it will be a little different than it is now, but we are still very confident that we will reach our overall goal, and we will just decide on how we can report on that going forward.
Okay, I think I have one more question here. How much will be normalized maintenance capex, and how much R&D is activated in the balance sheet? We expect capex to go down from historical levels that VWD had seen, as we are concentrating our infrastructure. We are, in a way, setting up a leaner system that we have currently in place. So hence we expect this capex for technical infrastructure to go down. With respect to the R&D capex, we have over the past quarter seen that more of the R&D efforts and efforts by the team are now focused on bringing all the products together, and less is actually then being activated at this stage and taken through directly through the P&L on the quarterly basis. So this might go up and down depending on our efforts, but overall I would say that the technical infrastructure capex has come down already and will stay at lower level than what VWD especially has seen in the past.
What are your ambitions with regards to corporate bonds data? I personally believe your equity data is very good, but corporate bond data, coverage and price feed could improve. Absolutely, but in the company as a total, we have most of the data, but it's just not available in the terminal. So there I can give you good news that this will dramatically improve in the coming years. Months. I mean, coming months when we migrate those data over to our main backbone. So, but it's not only the data is also improving calculators and different things. So it will that part will improve a lot.
Good. I don't have any.
Did you publish that?
Yeah, I just published it. Yeah,
thanks.
so I don't have any other questions actually now, I think. Okay, just the one popped in here right now. When will you launch a chat function so that we can drop Bloomberg? Christian, you can take that one.
We are using Symfony, an alternative to both, well, to all the other chats out there. That's a very solid solution used by different vendors and supported by big buy side and sell side, at least in Europe and in the US. So I believe, strongly believe that is the future. It's a very expensive chat in Bloomberg.
Good.
That's one. Yeah, and it's some more questions here, but I don't know. It's feedback from users. We have migrated. Yeah, it's yeah. Look, I can.
Can you take that? I think that's the last one I see, at least in my list here. So I don't have any others.
What is the feedback so far from users that you have migrated from the legacy Ebitda terminal over to the Infront professional terminal? How do you incentivize users to make the migrations? Yeah, we haven't really migrated that many yet. So because of the bonds data and some other things. We are we will also support all the pages in the Ebitda system to really make the transition easy for the end users, and for us it's no other options than making the user more happy than he was. He cannot feel that this is a downgrade in any way, so it must be better in all areas, and it will be. So, but for some users it's not yet, so we're just holding it a little bit back, so to make sure that this will be successful, and there's no reason why it shouldn't be, because we have all the data they have now in the old system, and we have all the functionality that they have now. And the Infront terminal is a lot faster and better product than they have now. So it's no reasons for them not to be very happy when they get upgraded. Okay, I guess we can stop there. Thanks for all the questions. Thanks for attending. Hope you attend the next time also. And if there is anything, send us an email. Then we will answer, and have a good day.
Thanks a lot. Thank you. Bye-bye.